Well, here we are. Somehow it's already the last month of 2021, and I was going to ask you guys to comment down below how your portfolios performed throughout the year, but I think they all pretty much look the same, peaking in January and February and dipping pretty much throughout the rest of the year. And this has resulted in the retail investor in particular losing interest in the stock market. And that's why I'm going to tell you right now that this video is not going to get the views it probably should, because people just aren't interested in buying stocks right now. But I'm also here to tell you that if you're watching this video right now, if you're somebody that's buying stocks actively in this current market environment, I believe very strongly you are going to be rewarded. I'll go through the reasons for that after I give you my stock picks for the month of December. Now, something important before I really dive into this is I'm going to be giving away $50 to somebody in the comment section down below that leaves me their due diligence on one of their favorite stock picks for the upcoming month. So just write your ticker symbol, type out a little bit of due diligence, and sometime over the next 48 hours, I will be picking somebody randomly in the comment section that I believe has provided good due diligence on a company and asking for their Venmo and PayPal and then giving them the $50 because I believe our community is stronger when we are helping each other out, naming off tickers for each other to look into. So be sure you take advantage of that down below in the comment section. By the way, I will provide some timestamps if you want to skip over the first part of this video and just hear my personal stock picks. Feel free to do that. Skip ahead in the video. I'll leave some timestamps for you. All right, so first I think we need to take a quick look at the market environment in order to gauge what might outperform in the coming months. By the way, I'm not your financial advisor, so this is not financial advice. I'm a 20-year-old kid wearing a t-shirt talking into a microphone to you guys watching this on YouTube. Please do not take this as financial advice. But what I see in the current market environment is something pretty interesting. You'll see at the top of the screen here, I have two different watch lists, one called Sexy, one called the Not Sexy. And guess what? The current market environment can be broken up into just those two categories alone. I know it sounds maybe silly, but it's true. The sexy stocks keep getting sexier, they keep going higher and higher in share price, and ultimately they're priced ridiculously high right now. Now, on the other hand, we have the not sexy stocks. These are the stocks that just keep going lower and lower and lower and lower no matter what happens in the macro environment, no matter what news the individual companies release. These stocks are just not in favor with the market right now, so they keep going lower and lower and lower. So the two different categories, one keeps going higher and higher and higher with ridiculous valuations, and one keeps going lower and lower and lower, where most of these are close to or are at 52-week lows. And we can see this here. For example, the gambling plays are out of favor with the markets right now. They're not sexy. DraftKings is $1 away from their 52-week low, $34.55. Their 52-week low is $33.33. Penn National is very similar. You also have the Palantir. Palantir is nearing a 52-week low. Activision Blizzard, the gaming plays like Corsair Gaming, also are pretty much at 52-week lows right now. We have Wynn Resorts, travel, and restaurants all nearing 52-week lows. And then we also have the Tattooed Chefs, the Shift Technologies, the former SPAC plays at 52-week lows right now. These are the not sexy stocks. Now, on the other hand, if we look at the sexy stocks, we can see that they're nowhere near their 52-week lows. In fact, they're closer to their 52-week highs than they are their lows. For example, these hardware plays, including Enphase Energy, are very close to their 52-week highs, and their 52-week lows are way off in the distance. Tesla's the same. Lucid Motors, Rivian, the EVs, they're sexy stocks right now. They're close to 52-week highs. Etsy, the same thing. The shopping and advertising plays like Apple, Alphabet, Trade Desk, and Microsoft, all pretty much at 52-week highs or slightly off and not even close to their 52-week lows. Now, we don't have to overthink this. What exactly is going on? If you look through this list of sexy stocks, you can see that these are stocks that have performed very well throughout 2021, whereas the not sexy stocks are stocks that have performed very poorly throughout 2021. So we can break this down and we know that this has to do with tax loss harvesting. People, investors, big money, they're selling their losers that they had throughout 2021 to hopefully write off some of their capital gains and their winning investments that are in the sexy category. Nobody wants to pay tax, and that's just simply what's happening. Now, will these sexy stocks keep going up forever? Of course not. The stocks that are sexy are always on rotation. Nvidia, AMD, Enphase, Tesla, Lucid, Rivian, Etsy, Apple, Alphabet, Trade Desk, Microsoft have all been not sexy stocks at some point in time. On the other hand, the current not sexy stocks like DraftKings, Penn National, Palantir, etc., those have all been very sexy stocks to own in the past. It's a big rotation, it's a big cycle right now. So on the other hand, will these not sexy stocks ever recover? Well, of course they will. Just like the sexy stocks will fall out of favor at some point in time, these stocks will recover. But when will it be, and how much more pain are we going to have to see in these not sexy stocks? Well, the bottom line is nobody knows, and if people are saying that they know factually when it's going to happen, I would stop listening to them because nobody knows when it's going to happen. And this is where most investors fail. They do everything right in the stock market, but when it comes to the stage of patience and waiting, that's where they fail. And guess what? If you fail at being patient, you fail at the entire game. You need to be patient in order to make money in the stock market. That's the way it is. Warren Buffett's most famous quote, perhaps, is that the stock market is a device for transferring wealth from the impatient to the patient. There's a reason that quote is so commonly used, because it's true. Now, with all of this said, there are much more than 5 stocks out there that seem to be very undervalued right now. I just have 10 listed in my not sexy watch list on Webull. But there's so many more stocks out there than this, which is part of the reason I want you guys to comment below with a ticker symbol and some due diligence on that company to perhaps win a $50. I know that cash is running a little bit thin for most investors right now. Most people don't have extra cash laying around to throw into the stock market. So hopefully that $50 incentive will help. I know it's not much, but it's something that I can do to help out. So with all of that said, I'll just quickly name off my 5 preferred investments in this list. The fact of the matter is there are much more than 5 stocks out there that if I had the cash to buy, I would do it. But just on this list, I really like DraftKings, nearing a 52-week low. DraftKings is a hyper-growth company and the leader of online sports betting and online sports gambling. The fact that it's at a 52-week low is almost a sin to me. I don't think that's right at all, and ultimately I think this is going to correct itself. Next on the list, my second stock pick is Palantir. I'm sure lots of you understand Palantir and have heard of the company before because it's a very popular retail stock to own. I personally do not own this one, just like DraftKings, but again, these are 2 stocks that, if I have the cash for, I will be buying in the month of December. I just have to decide which of these stocks I really want to funnel my cash into. Palantir is a software providing company that has the government and big, large corporations as customers currently. Over time, they may expand out to the mid-sized businesses and the small-sized businesses, but the growth in Palantir is pretty attractive, and the fact that it's nearing a 52-week low is also attractive to me as an investor. Next on the list is Activision for my third stock pick for the month of December. I actually had my twin brother buy this company long ago when he first started investing about a year ago now, and he has done pretty well on this investment. Now, obviously, it has fallen tremendously from over $100 a share, sitting at $58.60 right now, and that is only 16 pennies away from its 52-week low. So yet again, I think it's a great buying opportunity for Activision Blizzard. Stock pick number 4 for the month of December is the next one down on the list, Corsair Gaming. This is also a very popular retail name and retail stock to own. Eventually, this stock will go up. It will at least double in my personal opinion, just based on its current valuation and the way it's supposed to grow in the future. They own the Elgato brand, Scuff Gaming, and several other brands that are hyper growth. The company is set to jet, quite literally. I think the stock price is going to perform very, very well for investors over the coming year. Now, my 5th stock pick is Shift Technologies. This is one of those former SPAC stocks that is just getting pummeled right now. This is ridiculous. I'm not even going to get into it because I just made a full in-depth due diligence video on Shift Technologies. If you missed it, click the link above. That is the I in the top right-hand corner. Or also, I'll link the video down in the description below. But Shift Technologies, quite honestly, is probably the most undervalued stock in the entire stock market, at least according to what I look at and what I use to value companies. So now, just to review, I think there are so many stocks out there right now that are great deals, but the 5 I highlighted in this video are DraftKings, Palantir, Activision, Corsair, and Shift Technologies. I believe all 5 of these are going to perform very, very well over the coming months and over the coming year. And obviously, as I've already stated, I believe there are so many different stocks out there right now that are great deals and great buys for the coming year of 2022. Anyways, with that out of the way, let's go ahead and keep moving on. Now I'm going to discuss why I believe this is a great time to be a buyer in this current market, despite what all the headlines are telling you, despite what all of your friends are telling you, despite what maybe even perhaps your financial advisors are telling you. I already hinted at this early in my video, but this video you're watching right now, me, RexFinance, this video is not going to get the views it probably should because people don't want to buy stocks. And this isn't just unique to my YouTube channel. Go to your favorite stock market YouTuber. It better be me, by the way. I'm just kidding. But anyways, you'll see that their most popular stocks to buy videos were in January and February, when everybody was buying stocks and everybody was getting into the stock market. But think about it. What happened after January and February? That's when all of these stocks started to dip. And this isn't just a one-time thing. This has happened many times in the past. Whenever investors' interest in the stock market peaks, that's when you should probably get a little bit fearful. Whenever interest in the stock market is at highs, that's when you should get fearful. When stock market interest is at lows right now, that's when you should probably get greedy with buying stocks. And right now, interest in the stock market is definitely at lows. We see that on YouTube, but we also see it on Google Trends, where the stocks search term continues to fade. It started to recover in September and November, but just recently, as stocks have fallen due to all this tax loss harvesting, interest in the stock market is at lows. And again, generally, if you follow this chart, look at it. January, February, when interest in the stock market, interest in the stock search term on Google was at highs, that was right as stocks peaked. So you can look at this graph, and historically, whenever interest skyrockets, you should get a little bit weary. Whenever interest in the search term stocks is at lows right now, that's when you should probably get a little bit greedy. Lastly, I have just one more thing I want to cover, and it's the simple fact that right now it seems that we're at max fear in the stock market. No matter what headline you look at, it's a fearful headline. No matter what headline you look at, it's probably not a good headline for the stock market or stocks. But this goes right along with what I have been saying. Anytime we reach max fear or max FUD, fear, uncertainty, and doubt, that's generally when you should be buying stocks. And right now, I feel that we're at max fear. This new variant of the virus, I don't know how to say it, so I'm just going to call it the macaroni variant. But the macaroni variant started off with people saying, oh my gosh, we need to be careful, we need to lock down, we need to go back into quarantine, to people saying, oh, symptoms aren't that bad from it. Doesn't look like it's that lethal. In fact, it might be even weaker than the previous variants. We shouldn't worry about it. And then just this morning, Moderna's CEO started spreading FUD about this new variant again. We don't know what this variant is going to bring. We're hearing so many different angles on it. And that's uncertainty in the markets. That is fear in the markets. That is doubt in the markets. On top of this, today we confirmed that the Fed is extremely concerned about inflation. In fact, they said that they're probably going to have to end their taper much quicker, meaning that they're going to stop providing liquidity to the markets much sooner than they originally anticipated. What is all of this? That is fear, that's uncertainty, and that's doubt. But I want to end this video with one thing and one thing only. Buyers are going to start outweighing sellers. It happens when nobody expects it because everybody is in fear, everybody is selling their stocks. But think about it. After a day like today, this morning, blood red in the markets, people that wanted to tax loss harvest before the end of the year likely already did so. The people that had stop losses set on their investments, those probably got taken out and deleted. The people with weak hands that are in fear and want to sell completely out of stocks, they all likely have done so at this point, especially after the deep red we saw this morning. And this is, in my opinion, why the market started to bounce back as early as this afternoon. It's because buyers are starting to outweigh the sellers. Now, I don't expect this to be a smooth ride up to the top. I think there's going to be bumps, there's going to be bruises. But we're going to get there, and I believe right now we probably bottomed in the market for a lot of these not sexy stocks. Anyways, with that, if you guys are new here or returning and not yet subscribed, I'd greatly appreciate you hitting that subscribe button down below. Again, don't forget to provide your ticker symbol and some due diligence to potentially win $50 sent to your Venmo or PayPal. And lastly, if you enjoyed this video, please hit that like button. Feel free to share this video with friends or family. With that, have a great rest of your day. I'll be back with a brand new video later this week. Peace out.